All right. I think we are live. Welcome to the live pitch deck review. Today I'm going to look at two decks. One of them is going to be the party round deck, and the other one is going to be what is the other one? Let me have a look. The pre-launch deck, which is a platform for kind of planning ahead for product launches. Both of them have a lot of strengths and some pretty major weaknesses, and that's cool. That's how we learn. So let's start with Party Round. So Party Round is a company that is so they changed their name now and they changed their business model. But when they first launched this, they kind of went live with the slogan "Invest in Friends." Now, Party Round is kind of an inside term in Silicon Valley, meaning raising a chunk of cash from a group of angel investors. It's like everybody throws in a little bit of money, and then the round comes together. Now, a little bit of money for some of these super angels is hundreds of thousands of dollars. So if you quickly want to raise a couple of $1 million and you have a lot of very wealthy friends, that's called a party. Now, the problem with party rounds is that often it's actually a little bit complicated to manage large groups of angels, like making sure all the paperwork happens, making sure all the bits and pieces happen. And so that's the problem that this company is trying to resolve. Their slogan is "Invest in Friends," which is pretty much exactly what it sounds like. And ironically, perhaps for a company that is aimed at doing um, fundraising, their deck isn't that good. So let's take a look at what that looks like. I do like one thing about this deck, which is it's bold. It is bold. It starts right off the gate as Party Round is Venmo for fundraising. Can't get much simpler than that. It's super clean. It's such a good way of setting the pace. Um, I don't love the visual language, but it is very, very effective. They go straight into explaining what the solution is. So they're talking about makes it easier for founders to raise money from the people in their existing network. Super clean, super simple, and for the specific audience that this slide deck is talking to, it's actually a really shrewd way of telling the story. They know they're going to raise money from people who understand what the fundraising process is. And that makes the job a lot easier, right? You're basically creating a product for your customer, and that's the customer is the people you're raising money from. That means you can simplify the narrative massively. So the way that looks in this case is that they've basically just gone and explained what the product does, but there's an implication here, right? They know that the people that they're targeting understand this problem very deeply. And that means you can get away with a few things that you can't get away with on other pitch decks. So they go straight into what the solution is. Sorry, I'm recovering from pneumonia, so I'm still coughing a little bit. Um, they're talking about what it's like to create a round in minutes, to set it up, configure it safe, and invite investors. I mean, I love it when a product is this simple, right? It's super clean, super easy. It makes it very easy to understand what the product is. Really, really good storytelling on this. Investors gonna invest in 3 tabs. I mean, great. Super easy, super simple. I get it. Um, and they're talking about the value props, right? The value propositions is that you don't have to work with an expensive law firm. Uh, they don't like crowdfunding, which I can talk. I could probably do a different session about crowdfunding at some point. And it basically takes all of the kind of little challenges around fundraising away. From there, they kind of set up a narrative around. I think this is more of a mission slide, right? They're saying founders need better access to better tools to access funding. If you believe that that statement is true, then that's a very powerful way to get to a place where you can raise money. And so they're talking about some of the ways that they're going to do this. It's kind of both a vision and a mission statement. Um, it's a mobile first experience, which look, I'm not sure if that is that important in this space. Like, do we really need a bunch of angel investors to be able to invest from a mobile phone? This is kind of where they lose me a little. More smaller checks, sure. Easy raise from your whole network, sure. Where I'm falling over this is what is the size of this market and how is this company going to make money, right? So I'm already starting to, as an investor, I'm already starting to shape a couple of questions here. I'm not entirely sure where they're going with this. Then they talk a little bit about who they are. We're entrepreneurs and investors building a tool we wish we had every single day. Now that means that the category of founder here for this team slide, that makes them an expert customer, right? An expert customer is a very good um, thing to have on the founding team because it means that you really deeply understand the challenges for these customers. The problem is, a serial founder, an angel, I don't know what this person founded. I don't know what they've invested in, right? There's almost no context on this slide. And for Sarah, investor and advisor in companies, sure, but being an investor does not necessarily make you a good builder of tools for investors, right? Those are very different skill sets. And this slide actually throws up a whole bunch of red flags for me, right? Now, on the one hand, there's a very good chance that Jordi and Sarah will really only forward this deck to people that are already in their network, right? So they're kind of cheating, right? Maybe if this only goes to high net individuals that they already know, it doesn't matter. They don't have to introduce themselves because they already know them. As a as a general fundraising deck, however, this is a little bit more challenging because I don't know either of these two people, and I don't know. I'm so sorry. I don't know what their chops are. I don't know what makes them good. I don't know what makes them why these are like the best people in the world to start this company. Now, there are already a lot of tools out there that help investors, right? There's Angel List, there's all these other kind of tools. And at the core of it, this product didn't really make sense to me because it doesn't say anything about how it's going to make money. Now, since then, it's pivoted. The company is now called Capital, and they're actually a bank. And their selling point is that you get a 4% interest rate on all the money that's deposited in the bank, which is, of course, most of the kind of corporate banks, such as uh, First Republic and Mercury and all those banks, they basically don't pay interest, right? So this is a pretty good selling point for them, and it's a really powerful way for them to really show off that they are telling the right part of the story. Um, and I don't know if this is believable. I don't know if this slide makes this team believable. And then right at the end here, it just says, "Welcome to the party" with an email address. And other than that, there's kind of nothing. Now, this kind of nothing thing is actually a pretty big challenge because they don't say how much they're raising. They don't say specifically what they're going to do with the money. They don't explain how the company is going to make money. Like there's no business model, there's no market sizing. Like it's a really interesting teaser deck, right? If we go through it one more time, invest in friends, yeah, got it. Venmo for fundraising, got it. And they say it's easy for people to raise money from their existing network. Great. But there's nothing about traction. There's nothing about how much of the product is built. There's nothing about what they're going to raise or what they're going to close. And not like this deck is almost completely devoid of any of the information I need as a founder or as an investor to decide whether or not to invest in this deck. Really curious, really interesting. Now, they were successful in raising a serious chunk of cash, which honestly I find a little bit confusing. But I think the answer is just all on this slide. Like if you have enough cachet with the potential investors that they don't necessarily even really need to introduce themselves, well, honestly, you probably don't even really need the deck at all, right? You're like, hey, I am me, you know me, you trust me to build a successful product, give me some money. That's the whole pitch. So I just wanted to show this because it does a couple of good things around how it presents the information. I like the clarity. I like the like the number of words on each slide and the very simple graphics. I mean, these are not even prototypes, right? These are just little sketches, but it does indicate the level of progress they've made on the product. I.e., these are probably just prototypes. They're probably just raising money to continue building these prototypes, and that's fine. That is a totally doable thing. Okay. Enough about that deck. Let's start talking about pre-launch. Oh, how do I zoom this to? Sorry, I put both decks into the same. Um, I put both decks into the same PDF, but it turns out they were different resolutions, and so it looks a little bit weird. Okay, so let's look at the pre-launch deck and what they are doing. So pre-launch is building a company that is a product validation platform. On the cover slide, they don't say anything really about what they are doing. I mean, I don't really know what a product validation platform is. They're not saying anything about the stage of the company, like, is this live? Is this launched? Do they have a working prototype? How much are they raising? So based just on this slide, I don't really have enough information to get enough context to understand what I'm about to look at, right? And so I think this is a little bit of a waste of a first slide. I would have loved to see um, the size of the fundraising round, or something about what they do, or something to give me a little bit of context for what I'm about to look at. The second slide answers a lot of those questions, right? We've raised 1,000 companies, launched their products, and make $50 million worth of sales, biggest ecosystems of companies in consumer tech. Now, that is a hell of a claim, and that shows an enormous amount of attraction. However, $50 million worth of sales isn't money that flowed through their platform necessarily, right? That is the gross market value of the products. And so that doesn't really tell me how successful this company is. The other thing is, helping 1,000 companies launch their products could mean pretty much anything, right? You could say that about lots of different companies. And so I'm still a little fuzzy. Like, what does this company actually do? Helping people launch products. Are they a marketing company? See where I'm going? So there's a couple of things that are missing. And then they say they've built the biggest ecosystem of companies in consumer tech. But honestly, I don't know what TCF is. I don't know what Tech I Want, Creator Club, or CrossProm are. I don't know any of these brands. And so I'm finding this really kind of confusing story emerge where we're 2 slides in. I still don't really know what they do, what they're trying to accomplish. And so now I'm kind of losing a little bit of like faith is in these investors. You're making me read 2 slides and I still don't know what you do. Not great. Slide 3. Each year, millions of products are launched. That is probably true. And I still don't know what you do. Slide 4. Average product development takes 15 months and costs $300,000. 80% of these products fail, and the main reason is no market demand. Okay, I still don't know what you do. We're now 4 slides in. Slide 5. Fake door testing is the most popular way for unbiased validation, right? We're starting to talk about the product. These 2 are product slides. 80% of product launches fail is a problem. And fake door testing is how it's currently solved, right? So this is the kind of a competitive landscape type slide. And I still don't know what you do. But there are problems. Customers feel disappointed and cheated. Companies can't use their real brands, etc. Right? So fake door tests or other kind of pre-marketing campaigns is pretty well trodden ground for marketers. But the challenge is, you know, we're now quite a few slides into this story. Let me actually just remove the first part so I can see how many slides we've done. We are now 6 slides into this deck. And I'm starting to understand the problem space, but we still haven't talked about what you do. And I think this is one of the big challenges with this deck. You know, by the time we get 6 slides in, I really want to have a pretty clear picture of what you're trying to do as a company, what you're trying to build. And that's where they're letting me down here. So, their slogan here is like, we're taking fake door testing to Glassdoor validation. And then they're saying, okay, we're the only validation platform that shows real purchase intent with idea validation, price testing, and customer insights. Finally, 7 slides in, now we're getting to the nugget of what this company even does. I think if you had stuck this as your slide 1, like literally just drag it up here, boop, get rid of this one, boom. Stick a prelaunch.com on here and a raising $5 million or whatever they're raising. I still don't know. We haven't gotten that far yet. That is a really solid opening slide. It shows what you're building, the only validation platform with purchase intent, right? You could say something more about who you're doing it for, like what kind of products. And, realistically, this is probably physical products. But that's how easy it is to really just kind of crash right into the story and be like, boom, this is the thing we want to talk about for the next 25 minutes as we're doing this pitch. That makes it much easier to kind of set the context for what's about to happen. Because without this context, all of these slides, the way the human mind works is that we need little hooks to hook information on. And if I give you a hook, which in this case could be we're a validation platform that helps hardware companies prove purchasing intent and do market research before you go through the full product development process. Now there's a number of predicates companies and predicate products that you as an investor can kind of start forming a landscape around. And then when you start talking about all these other data points that we're talking about throughout this pitch deck, so we start here, but now we talk about helping companies launch their products, right? Now there's a little piece of data around scale that we can add to our mental model. Millions of products are launched. That's a hint at market size, right? 80% of products fail because of no market demand. Okay. The mental picture starts to build much more easily because we have that opening slide or slides that gives us enough context to really understand how this thing works. And so think about that when you're building your own pitch or your own story. Like, what are the pieces of the puzzle that you need as structure, like the skeleton or the studs of the building, if you will, before you start putting more meat in the bones and more resolution? You need something, some sort of context before that starts making sense. Okay. Let's have a look. Okay, so now here they're saying that it works. They have 86% accuracy of forecasting the product's demand. Now, 86% doesn't sound like a lot to me, but at the same time, it's better than zero, right? And presumably these things are going to get better. Concept validation. Okay, so now we're into a kind of a demo of what the product is. So we talk about the concept validation, where they're saying, okay, do you want this product to exist? You drive a little bit of traffic to it, and you can start collecting email addresses. Price validation, right? Now you can do reservations. So this is a really clever thing. If you get people to put real money behind a intent, so this is what things like Kickstarter is so good for, putting real money forward, saying, hey, I'm willing to, I will buy this thing, but I will put $10 in. That means I've gone through the trouble of finding my credit card, putting the information in. It shows real purchase intent. And that is really hard to fake, right? You can probably get 30 of your friends to put $10 in to prove something. But if you get 10,000 people to put $10 in, for one thing, that's a little bit of money for your cash flow. But much more importantly, it shows that people really want this product. And that in itself is a part of the MVP process, right? One of the questions is always like, okay, so what's the problem you're solving? How are people currently solving it? And what are they willing to pay to have this problem solved? Well, that's exactly what's happening. So in a very easy process here, they're going from concept validation to price validation to their kind of feedback thing. So the dashboard is actually a really interesting piece of this, because the thing they're really promising here is being able to do benchmarking against other products. Like if so and so many people end up doing something around the concept, giving it feedback or giving positive behavior somehow, or putting money behind it, you can benchmark yourself against other products. Now, I'm not here to sell this product itself. I think pre-launch is pretty interesting. But as a storyteller for an investor, what this really shows is that the company has thought through what the problem space is and how they're going to reach their customers. And that's actually really powerful as a story. Without having to do a demo, you can do okay, we validate the concept, we validate the pricing, and here's all the data you get. It's a really effective way of telling your story, and it's actually really well done. Our vision: all product launches start with pre-launching. Now we finally get to the place where they say, hey, we have a thought about what this space is going to look like and how people are going to actually interact with these types of products in a way that makes sense. Super helpful, super clever. I think this part of the pitch actually works really well. And then they ascertain that this is a $200 billion market. Now, I don't know about. I do believe that pre-launching probably is a pretty big market, and I wouldn't give the founders too hard of a time about this. And I don't really expect that if pre-launch is very, very successful, that they will be able to build a 200 billion company, right? Because the actual um, value of all the physical products that they're pumping through this, like I'm not buying it. Just not buying it. It's not. This is not the market size. And as I said, I'm willing to give them a break because it doesn't. All we have to prove on this slide is that it's a big enough market to be interesting to VCs, and I think we're getting pretty close to that. If their operating plan and their financial models back up that they have a very strong growth trajectory that they can actually work with, I think we're off to the race. Okay, this is such a strange slide to throw in at this point, right? They're talking about their vision is that all products start with pre-launching, and then they're trying to make a environmental argument, which is essentially if you don't sell your products, they're going to go to waste. Sure, I appreciate them for talking about environmentalism and climate change and what have you. And this is a very strange place to have that part of the discussion. I don't genuinely believe that most founders care about the environment. And I say that because the AI-powered pitch deck review service I created, has gone through hundreds and hundreds of decks, and less than 0.5% of founders even mention anything to do with impact. That is personally upsetting to me, but I think that indicates that most people don't care about this. What they do care about is not launching products that could bankrupt the company because it's a wrong product to launch. So I see the environmental protection piece as kind of a side effect of this product, but it feels weird to have that as a cornerstone of the pitch here. From there, they go talking about real traction. Now, they have 800 companies registered on the platform, 110 paying customers, $133,000 ARR, 200 products created, lots of visitors, subscribers, reservation, and 15,000 subscribers to the newsletter. Most of these numbers are not really meaningful traction numbers. Like, I don't care how many newsletter subscribers you. I really don't. Don't care. Don't care how many visitors there are to your site. Don't care how many subscribers you have. Really, the only thing I care about is the ARR. The annual recurring revenue of $133,000 in 4 months is impressive, but in 4 months, you don't know what your churn rate is going to be, right? You don't know how many people are going to keep using the platform. And so I'm going to take that 133 with a pinch of salt, but more importantly, there's no charts here, right? There's no graphs. I don't know I don't know how this is evolving over time. Now I know with 4 months of traction data, like it's you have 4 data points, or maybe you could do it weekly and you have 12 data. It's a little bit challenging, but I think, yeah, there's many ways of doing this traction slide better. And I wished I'd picked one of them. Like most of these metrics are kind of vanity metrics. Unless you can prove that companies registering on the platform actually converted to paying customers. The other thing that's interesting here is that they say they have 110 paying customers. That means that the average customer has paid them $1,200. Now, that is really interesting. That is a fair chunk of cash for per customer for the kind of company you're building here. So I'm very glad that they go straight into the pricing plan here. Now, they're saying that they have like free starter, advanced, and pro. It shows all the kind of different subscriber levels and reservations and all that kind of stuff. Now, I think that these numbers are weird, right? $79 a month, sure, I get, but why 163? Why not just 169 or 170 or whatever? $13 per month. I'm like, the precision of the pricing here is confusing to me, unless this is somehow priced in euros and then translated into dollars or what have you. And I'm curious why, with only 110 customers, we have this many pricing models. Like, what is the differentiation? I would have loved to see this broken down by, okay, how many, like out of these 110 paying customers and the 200 projects created, how did they split up between free, starter, advanced, and pro? And what does that look like? Now, also, if you have on average $1,200 per per paying customer, that means that per month they're on average paying $100. Now that means that they're pretty much all on the starter package. Now that's still a decent business model, but I want to know how this company is going to encourage people to kind of grow. So the land and expand piece, how do you bump them up into the more advanced plans? Which obviously happens when you have more projects or more subscribers or more reservations, right? People are going to choose the cheapest plan that works for them and then upgrade only when they need to. Well, the problem is if you're doing 10 projects, that is actually a pretty significant customer validation operation, right? Most startups will maybe have one or two. So I'm already again starting to like, okay, does this business model make sense? What does this look like? The freemium idea is a good idea, but how I want to see how this evolves and how the company is thinking about its growth. And that isn't really anywhere in here. And that's a challenge because you have that true both for traction. Like I see these numbers. I want to see them as charts. I want to see how things are accelerating and growing. Same thing here. I want to see how many people or how many customers are on each of these plans and, maybe some highlights of how the platform is being used. And I think that part of the story is missing here, which is a little bit sad because that could be a really powerful story. So as an investor, where my mind immediately goes is if I see this and I see that I can't really make heads or tails of the business model, and there's no charts and there's no graphs, I immediately start assuming that this company is trying to hide something from me. And then, of course, where my brain goes is like, what are you trying to hide? What is the piece that's missing here and why is it missing? And I think that's worth keeping in mind. Is like from a storytelling point of view, it's as important what you are showing as what you are not showing. And the investors know what you're not showing, right? Because they know all the data points that they need in order to do a risk assessment and an opportunity assessment on this company. And so if major pieces of this are missing, that's not going to end very well. From there, the company goes into their three big trends. So they're basically explaining what the different growth opportunities are. So they're saying that lots of people are using fake door testing, which is true. It's a pretty well-established marketing and market research tool at this point. They're saying that there's a huge amount of new D2C brands and there's a declining crowdfunding platform or the image of crowdfunding platform. I think all of those things are true, but those are just statements you're just kind of like out of the blue. This slide would be much better if you could show with numbers, like what is the excessive usage? How has it grown over time? Show me a chart. What is the boom of D2C brands in e-commerce? Show me a dollar figure. And finally, like how do you measure the decline of the image of crowdfunding campaigns? I don't know. But this is like, I don't know, these are three very important claims that you're making that are not backed up. And that doesn't sit well with me because it means that I don't know where these claims came from and how much I can trust them. So that is a mental note that I'm making is to do my own due diligence on this, which I should do anyway. Like if you throw a red flag in front of me like that, I will definitely do more. Okay. The why now piece I think is interesting, right? They're saying product creators are losing hundreds of thousands of dollars on products that don't have demand. Sure. With rumors of an upcoming economic crisis, more important to avoid resource waste and failure. Sure. But neither of these things really support the claim at the end here that makes it perfect timing for our law. Rumors of an upcoming economic crisis, like you can't build a company around rumors. You really can't. And product creators are losing hundreds of thousands of dollars. Yeah, but they have since for the past 100 years, right? There's nothing in this why now slide that explains why now. So I would think about this differently. It's like, okay, what has shifted? Like, why could this company not have been started 5 years ago? And why is 5 years from now too late? I think that's a really good way to think about a why now slide. And this company isn't doing. Which makes me think, well, maybe now isn't the time. Like, why? Like, if there's no like urgent need right now. So yeah, this slide could be significantly improved. Then they go into a team slide. Now, there's advisors on here. There is the co-founders on here. It is interesting that they have the former VP of sales from Indiegogo, right? That indicates to me that they have somebody on the team who really understands crowdfunding at least. But they've also said that crowdfunding is on the way out. So I'm curious, like, what is the reason that John is such a powerful player potentially on this team? Like, what is the thing he unlocks that makes this team the best team to back in this space? Now, the other problem with this is that all of these things, all of these team members, they say co-founder of this, serial founder of that, engineering manager of this. Like, none of those things really shout, okay, definitely the right company to be backing in this one particular space. Your job as a founder with your team slide is to basically paint a picture like, hey, this team has the competitive advantage that when you put this team together, we have an unfair advantage over all our potential competitors. The other problem here is that these are all first names, right? So I can't really easily Google them. I can't look at their LinkedIns. There's no link to their LinkedIn. I mean, this is a pretty weak team slide overall because I don't have the context to make the decision to know that this is the right team. There's like John's bio there where he mentions Indiegogo. It's pretty much the only thing here that gives me any sort of trust that this is the right team. And he's not one of the co-founders, right? So I'm finding myself curious, like, why is this the right team? Like, it's not selling me, which is a really, really big problem for early stage companies because essentially all you have is your team. Okay. Then they go into the ask and use of funds. So they're making a couple of mistakes here. One, they're saying they're raising 1.5 million. Great, no problem. But they're also naming the valuation, $10 million valuation. Now, that means they're giving up 15% of the company, which is about right. And honestly, at the stage of company they're at, 10 million is probably the right valuation. But you don't set the pricing. The market does. So by going out like this, you're kind of showing your hand. And if an investor comes along and says, actually, I want to outbid this, I want to give you a $20 million valuation or a $15 million valuation, right? You're kind of pre-negotiating. The other thing to keep in mind is like, there's no need to put any sort of things like this on the pitch deck unless you have a term sheet in hand. So I would get rid of that and really just focus on the amount of money you're raising and what you're going to do with it. Now, the problem with this use of funds, like if you've read any of my stuff, is that this is a like sales team hires, like how many, with what goal? Product development, sure, but what are you developing? What are the milestones you're hoping to hit with that $1.5 million? Marketing, cool. Like, what are you going to, like, what are the goals? What are you hoping to accomplish? A much better way to do this would be to have specific targets. Like, okay, within, like by the end of 2024, we want 1,000 paying customers at this customer acquisition cost, and they're paying us this, right? You probably will have modeled that out, but if you set that as goals, then you have a much clearer picture for how this company is going to evolve. And the goal of that is to say, okay, if at the end of spending through that $1.5 million, you accomplish all of the goals that you have, are you then ready to raise your next round of funding? If the answer is yes, awesome, you're off to the races. If the answer is no, then you're like, well, you need to replan this. You need to get to a place where you paint a picture of a company that if it does everything it says it's going to do with the money you're raising, you're ready to raise the next round, or you're ready for some sort of event or some sort of inflection point that helps the investors co-dream with you and explain, yeah, they're on the right path, they're doing the right thing. Okay, and so this slide deck closes on essentially the slogan of the company, the first step to any launch. I like this. This says exactly what it needs to do. It has the contact information. It has the kind of the vision for the company, the first step to any launch. It's a great closing slide. So there was a bunch of things in both of these pitch decks to take a look at and to further improve. And that was my pitch deck review for this time. So you can always reach me on me@haye.me. Send me an email there. And if anybody has any questions, I'm happy to take some questions. Thank you so much for joining. Thank you for being part of the experiment. And I'm hoping to run one of these once a month. So if you have a deck that you would like to have torn down, feel free to submit it to me. And yeah, I look forward to seeing you in about a month.